Ladies and gentlemen, hello, good morning, and thank you all for coming. Welcome to our session on investment trends on emerging markets. My name is Adrian Finigan. I'm a news anchor with Al Jazeera, English. We are recording our discussion today for our program. Okay, this may sound a little disjointed because on TV there'll be a preamble, an introduction that I'll be doing outside to camera, so there'll be a bit of a jump straight into our discussion. So here we go. All right, since the 1990s, globalization has given the impression that emerging markets were and could converge with developed nations. The BRICS and Next 11 became the latest investment craze. Hundreds of millions were lifted out of poverty, and millions more climbed the social escalator into the middle class. But something has gone wrong. The end of the commodity supercycle, easy money came along before populism and then the threat to globalization. And it can be argued that most emerging market growth was attributable to China and India. So, let's dissect what countries really want from globalization and, more importantly, foreign direct investment. Our panel here at the Doha Forum is at the cutting edge of policy making. Joining me, Arancha González, Executive Director of the International Trade Center, Murat Emirdag, the Chief Executive of Hepsiburada, Alwaleed Thani is the Chief Executive of the Investment Promotion Agency here in Qatar, and Issam Abousleiman is the Regional Director for the GCC at the World Bank. Welcome to you all. Thank you for joining us today. I want to start with what can only be described as a threat to globalization, this trade war between the United States and China. President Trump's threats to upend the post-war liberal order, including attacks on allies and institutions like the World Trade Organization. Foreign direct investment into emerging markets as a whole fell last year to its lowest level since the 1990s, according to the Institute for International Finance. And that populist call from Trump for companies to repatriate money and reshore production back to the US appears to have resonated. I want to get your thoughts in particular on that. But Ali, let's start with you if we can. You head up an agency that's looking for investors. What sort of investors are you looking for and why?
Well, thank you, Adrian, and it's a pleasure to be here, especially with such a diversified panel. We have the private sector, international organizations, FDI agencies, and looking forward to kind of engage in this discussion. Back to your question on what we are looking for in terms of FDI. I mean, the general trends in terms of protectionism, populism, and it's always been negatively correlated towards investment. Trade and investment is very closely interlinked. Any disruption in the global trading order and the rules-based multilateral system would lead to a negative impact towards FDI inflows. And we are seeing this now, especially with regards to emerging economies. Now, what this has led us to kind of rework or rethink is what are we really looking for in terms of attracting FDI? What kind of FDI should we be aiming for? And this is the question I think that Qatar has some clarity on. Since Qatar isn't really looking for quantities in terms of FDI, we're really looking for quality FDI. And by quality, I would mean transfer of knowledge. I'm looking for skills, talent. And I think Qatar has a lot to offer in terms of its own value proposition. And I think many developing countries, especially some at this stage of the cycle, are reworking this question and rethinking it and trying to find how investment could play a role in terms of alleviating poverty and achieving sustainable development. Thank you.
Issam, there's no doubt that the Middle East needs to lessen its dependence upon hydrocarbons. I mean, it's pretty easy to say that, but how on earth do you go about it? Would you advise Ali, for instance, to float Qatar gas?
Well, thank you, Adrian, and thank you for a very simple and easy question, actually. But let me say a little bit, a few things. You put a big picture out there of what has been happening in the world in terms of FDI, and true, I mean, the FDI has been going down over the last few years, and it's almost half what it used to be 4 years ago. But the GCC in general has bucked this trend. Actually, the GCC FDI has been going up, especially in 4 countries out of the 6 countries in the GCC. And one thing that Qatar is doing, and also the rest of the GCC is doing, is that they are working on the essential, which are like how to get the investment in and how to transform their economies. And if you look at their vision and their transformation plan or development plan, all of them actually have the diversification as a main driver of where they want to head into the future. So while the hydrocarbon has provided a lot of growth in the future, they all know basically that this is not where they need to go from here on. And a lot of things are being done, and as Sheikh has mentioned, opening up the economy and bringing but investor in not the traditional way, not into the hydrocarbon, but investors that can really help them develop that economy. Another part that they're working on is to make it easy basically for investors to come in, but also to provide them the value proposition of laws and regulation that can actually be predictable and that can actually attract the type of investment that can go forward. And we can see, I mean, from Bahrain to Qatar to Saudi Arabia and Oman and Kuwait and the UAE, they are trying also to move into and take advantage of the disruptive technologies that has taken place and prepare the ground for that in a way that will help them. The good news about this area is that it's young, so they have a lot of human capital, but this is a human capital that they need to take care of, which means they need to train and retrain, if you want, the people that are in, but train the newcomers to be able to add that value and be like the asset for investors to come in and invest in this new economy that they are seeking to do. Let me stop here. There are a lot of things basically there, but I'm very, very optimistic about where Qatar is heading, and we hope that the 2022 with the World Cup will also bring a lot of attention to a lot of these issues.
Murat, is all foreign direct investment equal? Do I really want an Uber, an Amazon in the Middle East, or any emerging market for that matter? Do they not have a tendency to crowd out local startups?
Thank you so much for the question. So I am the CEO of Hepsiburada, which is the leading e-commerce company in Turkey and its surrounding region. So we are like the local and also the market leader, which is rare to see around the globe nowadays. And I think for a tech company like ours, where you see hyper growth, when you talk about investments, either making investments or taking investments, you look certain things, which are mainly not just capital. It's much more how you get more from these synergies that you might have also on top. If there is a market you are considering, also you look for if there is a talent pool or if there is a regulatory framework that can help you and encourage for innovation. So those things are very crucial when we look for taking or making investments. And for our case, in this case, we are really like the leading e-commerce platform in the region, but we are really now want to go global. Like we want to become one of the global players, and now our vision is, after many years in the Silicon Valley and US, you know, I'm back to this company's CEO role, and my primary vision and mission is to deliver this story from this region as the leading tech company in this great region from east to Germany, west to India. So this is, I think, the area where we see an untapped opportunity, and we really want to address that opportunity by creating these synergies that we might have with investors or also with partners and strategic partners we might have along the way. So I think now it's actually a pretty fair chance for local players like ours to become global and make a difference with the right strategy, with smart investments, and also choosing the right areas to compete.
Arancha, I want to ask you the same question, but from a different angle. Okay, so I get a cheaper ride with Uber, but the drivers are poorer for it. I mean, there isn't a driver anywhere in the world that would say they're making more money, they're making a better living working for Uber, is there?
Look, at the back of your question is what's happening with foreign direct investment. And I'm afraid that we are, for the long term, going to see a continuous decline in foreign direct investment because there are 5 structural factors that are pushing it downwards. First, the structural factor is geopolitical tensions. This is not going to be resolved anytime soon. This is a long-term issue that chills foreign direct investment. Number two, the digital economy that is changing the way companies are deciding where to locate. That has a big impact on how we're going to be taxing it, regulating it, again, chilling factor on foreign direct investment. Number three, the fact that there is no system of global governance for investment. It's getting fragmented. Countries are doing this either at the national or the regional level at best. Number four, the fact that there is more and more security screening of investments. And this is a general trend too. And five, and final one, the fact that we are much more looking into responsible business conduct. That again is leading to probably less investment, but maybe it's leading to what Ali was mentioning, is an important fact of our time also, looking more at the quality of the investment. And this is where I want to link with the question you were asking. Maybe it's not all that bad that foreign direct investment is on a downward trend if the investment that is coming, we are looking more at the quality of this investment, and if we start to leverage more domestic investment, which also many countries are sitting on, but they are not leveraging enough.
Sheikh Ali, what incentives are you able to offer companies coming to set up shop here? Are you concerned that ultimately you're going to create jobs, but the profits are going to leave the country? You surely want to create a circular economy that benefits the nation, don't you?
Well, I mean, let me take kind of a step back because we were talking a bit about the commodity super cycle. And I think this is one of the structural issues that Qatar is facing. Since, you know, we see non-oil and gas GDP growth far accelerating much more than oil and gas GDP growth. But we see the inverse in terms of FDI inflows, where FDI inflows are the majority of which is in the oil and gas sector, and the minority is in the non-oil and gas. And how could we fix this? And especially how do we use incentives to kind of reinvigorate the non-oil and gas? I think the government over the past 2 years has embarked on a liberalization program. We had the law number 1 in 2019, liberalizing all sectors to 100% for investment. We had the Free Zones Authority established, allows 100% for investment and tax holidays up to 25 years. And other platforms such as the Qatar Financial Center, the IPA has been recently established as well to help coordinate and promote Qatar as an investment destination. And I think, I mean, generally the main drive has been in this direction. And we really think that all these initiatives, in addition to incentives, could provide a lucrative value proposition, and more specifically in terms of attracting high-skilled labor, attracting talent, and not only attracting them, but retaining them. And this is the tricky question, I think, that most countries, especially developing countries, are looking to answer.
Murat, do you want to come back on what you heard just then? I know companies aren't social, not-for-profit organizations. Is it not rather unedifying, though, when you have emerging nations competing for the same dollars for growth?
Well, let me start by saying that FDI still is the single most important source of financing for development around the world. So there is nothing bigger than that. I mean, even when you combine all the flows of developing funding that goes into, it pales. Okay, so it is important. Now, does it mean that with all what's going on in the world today, that this is going to be the trend going forward? It's very hard to predict because there is a disruption taking place today on a lot of different fronts. And Arancha has mentioned a few of them, but I'm going to go a little bit to the other side, which is what Murat alluded to. I mean, the digital economy and, you know, what's happening in artificial intelligence, what's happening in Internet of Things, what's happening basically in the 5G and the interconnectivity that this is going to be providing is going to be basically developing a new type of services and industries and training and type of of workforce that we might not have seen over the last 3-4 decades. So when the World Bank introduced its report on the future of jobs, it was very clear that the future of jobs might be very different of what has happened over the last 2-3 decades. And what will differentiate countries is not basically if they only can do like the ease of business and the reduced barrier and so on, but it has to do with cost, it has to do with what type of value proposition this country is going to be providing. And we're going to see differentiation between those. We're going to see countries that will be able to adapt and move and prepare their youth and prepare their workforce basically for what's happening into the future or what might be coming based on these trends, and those who might be behind. And there's always a first mover advantage here. So the more basically the country is prepared from their labor force, from labor laws, from the business environment, as well as, and I still emphasize, the human capital, because the future economy is going to be a lot based on knowledge. I mean, repetitive things might go into robotic stuff, but what you're going to need into the future is very different type of skills, basically, to lead that fourth industrial revolution. So I am not as pessimistic, like it's going to be across the world, that I think they're going to start being a lot of differentiation. And that differentiation has a lot of impact on those individual countries and probably regionally. Let me just say one thing on the connectivity. There is a connectivity basically today that's very different than the past. I mean, when we talk about trade, it was usually physical trade. When we talk into the future, I mean, you can imagine, but no one can really predict it. But the digital economy has already been gaining a lot of stuff. I mean, even things like the 3D printing has changed a little bit what manufacturing would look like. The certification of the industry has also changed how the manufacturing is taking place today and who's investing in what. So there is a lot of trends today in the world that are very different than what we have seen. And I still believe that it will all end up on being based in the future, who's going to take advantage of this on 3 main things: your business environment, your human capital, and your basically location. And your location might not be only the physical, your location on the digital network. Let me stop here.
Arancha, do you want to come back on that? I see you nodding vigorously there.
Yeah, I mean, the old game was basically incentives to attract investment of whichever type, basically. And, you know, sometimes with incentives that were not clear whether the deal was about luring somebody because of the incentive or because it had a good value proposition. Whereas the future looks very different. The future looks skills and ecosystems. And the investor will not need an incentive if you have a good value proposition to offer in the form of a serious ecosystem. And this is where I very much agree with him on the human capital. So the game is changing. So I think what's important to understand is that it's not enough to look at whether the figures are telling us that investment is going down. It's important to unpack what's behind this, which is, in my view, the game we should be embarking on, which is qualities of the investment, rather than just simply looking at the quantities of the investment.
Murat, do you want to come in on that?
Yeah, actually, I pretty much agree on the human capital idea because, you know what, if you just go back, internet has been with us around for 30 years. And half of the global population is below 30 years old. So if you just make a quick math, you can see half of the global population actually was born to internet world. So when we see the future, we should definitely keep this in mind. The future economy will be shaped by innovation, technology, and entrepreneurship. So I certainly believe that the human capital is actually the core of this future growth. And when he also mentioned like all these upcoming technologies, we are going to redefine the business model and economic model as well. So I think for us to consider investments or where we're going to locate our companies in the future, we're definitely going to focus, number one, on the human capital. Can we attract talent? Can we retain talent, like you said? And also, can we also develop future ideas from this community? Because that's the crucial part of the sustainable growth.
Sheikh Ali, I want to move on to infrastructure now. When money is no object, the last 25 years, for instance, have transformed this country, Qatar. I know it's not quite money no object, don't get me wrong, but when money is particularly tight, emerging markets we're talking of here, where do they turn? How do they transform their societies in the way that Qatar has done?
Well, I mean, investment could play a role in kind of achieving sustainable economic development. And we've seen, especially south-to-south investment and trade within emerging economies, that could, I mean, help achieve some of the goals that countries which might not have the same resources that probably Qatar benefits from, they could gain a lot from it. Now, I think the question is, and the real issue, and Arancha kind of touched on this, is with regards to incentives, liberalizing, and it's always a moving baseline. And this could easily lead to kind of a slippery slope, like race to the bottom, which is what I think all of us try to avoid. So we need to really look at what industries are fragile, what needs to be protected, and what really needs to be grown and in a sustainable way. And I think that is the main way that emerging economies and developing countries could seek to achieve their goals.
Murat, Sheikh Ali mentioned south-to-south investment here. Is that the big winner? Would you put yourself in that bracket?
I think, yeah, definitely emerging and developing markets, they can collaborate, because I think the simple idea actually is, can you create 1 + 1, 5 or 10 or 100? That's the new technology. So when we look at all these opportunities, what we look actually is, do we have capabilities and synergies when we combine those together and create a value that is going to be actually a unique value proposition for a sustainable time? That's what we are looking for. So it could be from an emerging market to emerging market. It could be from a developed market. I think at the core, the idea is to create this unique value proposition. So that's what we are looking. In case of e-commerce, I can give you like very tangible examples. Like what we are looking for now, e-commerce actually is cross borders. There is no boundaries, right? So we can sell goods and digital and physical goods across the borders. So what we are looking now is, in order to make this global and access to billions of people around the world, you need to focus on logistics, operations, data, technology in depth. So all those things actually can come from anywhere. So it doesn't make, actually, I think it's not, we shouldn't limit ourselves just looking at certain geographies or markets. We should think broader, and because we can see so many synergies from so many different geographies. All these capabilities coming together, you can create a global success story. That's what I believe.
But Issam, the often heard complaint is we need to build a road from this port to this city. The World Bank says it can't help. I mean, is there any surprise that emerging nations turn to China for help?
Well, no, because basically there's no surprise. It's not only China who's helping in the developing world. Qatar here is another example. I mean, the Emir this morning said how much basically Qatar, as a small nation, is putting in development the GCC in general also, and some other countries around the world. No? So China, like England, like a lot of other type of countries who are interested in development, they are putting this. But let me just go one step back and say a couple of things. I mean, can economy transform itself? Yes. And I'm gonna go with a humble example of Costa Rica. Costa Rica basically transformed itself without any resources like what the GCC has. They used to export bananas mainly, okay? Now they export chips and medical equipment. And this was in a very short period of time, relatively speaking, in a period of a nation. And how they did it, basically, they did it by getting what I just mentioned before. So a good strategy for investment, attracting Intel first to be able to manufacture their chips there, then creating the R&D out of Intel, and from there basically you had spillover around for a lot of different small and medium enterprise, but also basically into like other stuff that they were able to. So yes, a nation can transform itself. I mean, we have small nation as well as big nation like Australia or Norway. I mean, Norway is not very big, but who were based on also like minerals and hydrocarbons. And they were able to diversify their economies, taking in the right strategy, putting in the right ecosystem, and creating basically the value proposition and the human capital that was there basically to develop that. So the development money, where it comes, it doesn't matter as much as how it's being utilized. Well, the road is still important, but a good network and a good 5G probably in the future might be as important or more. So the type of investment and how you create the strategy first and how you implement it on the ground and how you create the track record of stability, great regulation, good laws, implementation on the ground with a great track record, that's what will bring your investors. It's not basically where the money is coming from for the development. And I still insist, basically, that the biggest part of where development money is coming from today is from FDI, still when it's half of what used to be 4 years ago.
But Arancha, how do you ensure that the money that is coming in through foreign direct investment is going to the right sort of places? I mean, there are downsides to it. I'm talking about money that is basically going into the banking system. It's going into stocks. And bonds. I mean, that's not productive money, is it? And leads ultimately, or often, to crises.
Yeah, and I want to, before I get to that answer, pick up on the previous question, which was this South-South dimension. We are in a forum discussing multilateralism and multipolarity, and one of the areas where this multipolarity is the starkest is in trade and investment. If I look 30 years back, 70% of international trade was north with the north, 20% was north with the south, and south-south was 10%. This is only 30, 40 years ago. Today is one-third, one-third, one-third. Same story with investment. Who is pushing for governance on investment today in the World Trade Organization? It's not America, it's not the EU, it's developing countries. It's the South, who have huge interests in making sure that conditions of accessing other developing countries are also clear and transparent. It's a negotiation that is pushed by Chile, by Colombia, by China, by Qatar, who want to make sure that there is a bit of a better transparency over investment regimes in other countries. So I think this is an area we should not be neglecting. There is a big game that is called South-South also on the investment space. Now, in all of this, at the end of the day, what matters is back to the quality of the investment. Where is this investment going? And I think we are not doing enough of a good job. Countries are not doing enough of a good job, not only on tracking how much investment they attract, but what is happening with the investment they track. They attract. What is the tracking? What KPIs is Ali going to use to measure the investment that he's capable of attracting here in Qatar? And what are the KPIs that the countries where Ali is investing are going to use to demonstrate that this is going into the productive economy? It's not going to sit idle and just produce returns for the happy few shareholders. So there is a big discussion to be had on quality and tracking of the quality of the investment with better metrics that up until now, frankly, we've not been very good at capturing.
Ali, just picking up on that.
On Ali
No, that's fine. No. Have you ever had to turn away an investment here in Qatar because you feel that it's not the right fit? It's I mean, perhaps on moral grounds, I don't know.
Well, let's go back. The Investment Promotion Agency recently established. So we accept or we receive requests from all investors in all sectors. We do not necessarily turn away any investors. Now, we would focus more on investment that actually brings in talent, especially in terms of high-skilled labor, and helps us in achieving our sustainable development goals. But Arancha really touched on a very good point, is that there is no benchmark, there is no matrix, no KPIs, and this is an ongoing discussion even at WIEPA, which is the World Association of Investment Promotion Agencies, that really, how do you measure what is actually a good investment and what is not? And usually you don't really know the answer until decades into the future, when you really see what that investment materialized into and what is the net effects on the economy, on the environment, social and cultural. So there's many questions, and I think, we're all in this together, and I think with partners like the ITC, like forums, to have dialogue, and for us to actually monitor and see how things develop. I think we'd be much more closer to the answer to this question sometime into the future. But I think that at this stage, really, nobody knows.
Issam, how do you advise emerging market nations with how to cope with an influx of investment on issues like aggressive tax avoidance, that sort of thing?
Well, we hope that there is this aggressive FDI going everywhere. It's not the case, which is unfortunate. However, there is basically a basic advice, which is you want to attract FDI to improve the standard and quality of living of your people, create jobs, upgrade your economy, and make sure basically that whatever industry you have inside also can either benefit, or you have new companies that move into that space and with the spillover of what's coming in. There are a couple of things basically that some of the studies have showed that, for example, coming into mining or agriculture does not have a lot of effect on creating more jobs or spill over into society versus other type of industry. And one of the main advice that we give is that, okay, well, you need to open your economy so first they can come in. You need to create the ecosystem, not only basically to have the least trade barrier basically to export what you have. And here export is not, when I say export, it's not in the traditional sense of export. It's not like a physical good anymore only. It's a physical good and probably a digital good. And basically making sure that this is happening and making sure that there is an upgrading of whoever is already functioning in that. Turkey was a good example. When they opened their economy for foreign investors to come in, it helped them basically upgrade all their industry inside. They became very competitive, bringing in more technology in the country, and they had to survive internally, you had to do that. And the SMEs internally also were able basically to have this spillover. So for us, it's not like one advice that we give. It's basically a whole ecosystem that needs to be done. But the most important part of it is that the country would need to look at its own value proposition and how this FDI is gonna help improve the standard of living of its own people. And that comes basically from probably higher quality jobs, more skilled jobs, more knowledge-based economy, more of what the low-skilled job will not bring to these countries. And that also, in a way, once you have done all of this, your immediate productivity and growth goes up.
Okay, 2 more questions, and then we're going to open it up to the floor, okay? Murat, can you take a business model that works in one part of the world, in a developed nation, and drop it into another part of the world, an emerging market, and expect it to work?
I think the short answer is no. I think it's very crucial to understand the local dynamics. There is no one-size-fits-all kind of formula for success. What you should understand is you can identify a core mechanics that can work and resonate with end users because you are solving a problem in ideal world, but the solution might be different from market to market depending on the needs and dynamics in the local environment. So I think there is definitely crucial aspect, how you can localize the solution. And going back to also the previous conversation, I think it takes 1 or 2 success stories to create an attractive investment environment. That's why I think, imagine if there is a geography where you create 1 or 2 success stories, there will be more and more to follow. Not just talent, but also investors. That's why I think the track record is very important. But in order to achieve that, you cannot go after tons of different ideas or problems to solve. I think it really requires focus. We can create regional investment ecosystems and where everyone actually stands for something else. They can differentiate themselves and they can focus on certain problems, global problems to solve. And in this way, you can attract a certain quality of talent in different regions, and this is going to also bring high quality in investments, better end results. So I think there are aspects of where you find a solution and try to spread it across the globe with local different touches. Or there are sometimes also regional hubs where you create an idea and make it actually grow across different regions in a different way. So I think there are multiple ways of handling this, but I believe there is kind of no single formula, but it is always good to focus and actually, like you said, have a very clear set of KPIs and metrics where you define success for each hub. And I still believe there will be many more regional hubs, investment hubs in the world moving forward, because we see more and more regional companies like ours becoming very strong in the global arena. And this is actually all about understanding local, regional nuances and then making them very scalable in this right economics model.
Arancha, is there still a rational argument for investing in emerging markets when you look at the returns that developed markets offer compared to emerging markets right now?
Absolutely, yes. I mean, but not yes in the absolute. Is yes tailored to the specifics of the countries in question. There is huge untapped potential. I mean, I happen to travel a lot in the African continent. And I can tell you, if I was an investor, I'm not. Unfortunately, I had a UN agency, so I mean, I look at this and I try to advise and support. But if I was an investor, I would go with buckets of different investments that I could be making in the countries, in agro-processing. I mean, not just in this, world of technology as such, but in making sure technology flows to the agricultural sector, making sure that we connect technology with healthcare sector, services economy being one that requires huge investments in the African continent, very young population with relatively lower quality of services, education, healthcare, distribution, finance. Opportunities are incredible. Now, let me tell you one thing, Adrian. Very often I meet these investment promotion, heads of investment promotion agencies or investment ministers that tell me, I am doing so many reforms, I am doing so many trips to sell my country, and I still do not see FDI improving in my country. And this is because attracting investment into your country is not just a function of what you as the head of that agency or you as the minister in charge of that ministry will do. Attracting investment is a function of how coherent the country is in presenting itself as a destination where an investor, and I always start from the assumption that all investors are good faith, any investor would be attracted to go to you as opposed to going to your neighbor. It's a national endeavor. It's not just one person. It's collective. It's the finance minister, it's the infrastructure minister, it's the defense and security minister, it's the agriculture, it's everybody. It's coherence that very often we are not seeing as much as an investor would like to see, to choose between you and somebody else that is also trying to lure you.
Great. Let's open it up to the floor. And a hand straight up over here. You were first, sir. Let's get the microphone over to this gentleman here. Please tell us who you are and where you're from and who your question is to when you get the microphone. Yes, sir. Hello.
Hi. Thank you very much for this very insightful discussion. My question is to Ms. González. I just want to know if the fact that this fourth industrial revolution could become an equalizer in terms of for an investor. For example, if I want to invest in a developed country, I need to reskill the workers there. They have to unlearn old ways of doing things, relearn new ways of doing things. If I go to an emerging country, they probably, I just need to skill them so they don't have to unlearn. So in a way, the cost of investment isn't that different. I mean, I don't know, is this a reasonable argument? Can emerging economies leapfrog to become, I mean, is this an opportunity for emerging countries and for investors? Thank you. My name is Bilal Sabir, by the way.
Thank you very much, sir. Who wants to take that? Who was your question directed at, by the way? It was Arancha.
I think technology, which is at the heart of the fourth industrial revolution, has a huge potential to help countries leapfrog, has a huge potential, and I stress the word potential, to equalize, but we need to make sure that this is what happens. If I look at, for example, access to broadband, that should be like a matrix to understand whether or not this fourth industrial revolution is going to be an equalizer, and I still see half of the world population not connected to broadband. We just reached 50% of the world population in 2019. There is still another 50% to go. I can say in the abstract, yes, the fourth industrial revolution can be a huge equalizer, but if I look at broadband connectivity, then I'm going to think, wow, we better focus on making sure that everybody is connected. If I think in the abstract, yes, but if I look at what is happening on the education system in many countries where girls are being pushed back and boys are being pushed in the front, then no, it's not going to happen. So potential, yes. But we need to make sure that the divides that exist in the analog economy, in the third industrial revolution in which we are bridged if we want the fourth one to be an equalizer.
Okay, there was a hand over there in the, yep, gentleman at the back, over there, yeah. He was next up with his hand. Yep, sorry. Hello,
Hi,
sir.
thank you very much. So my name is Harun Sharif. So I was the investment minister in Pakistan till a few weeks back and the head of Investment Promotion Agency. So a bit of a comment, and my question is to the World Bank and to the panelists. So in the past 1 year, under my leadership, I can say, and Prime Minister's leadership, Pakistan gained 28 points in ease of doing business. I knew in my heart it will not fetch even $1, okay? Now that is something we need to think, which has been commented upon, that a standard solution to all countries is not helping investment flows. Like for emerging markets with large labor forces, you need to have a different value proposition. For smaller countries, you can see to catch up with technology quicker. So my question is more of a political economy question, that the way technology or the digital economy is growing and helping countries and people grow, the governments in emerging markets are failing to catch up in terms of investments needed in large labor forces and skills. What it might do, the political economy question, which I would like a comment upon, is that it might lead to more inequality, which is already doing. 78% of the jobs which humans were doing will be done by, will be reduced to 48%, machines will do it. So the nature of foreign direct investment, when it comes to a country and the politics looks inequality, joblessness, privacy concerns, how do you see flow of capital happening in the coming years? So that's what I wanted to raise.
Okay.
Thank you, Minister, and I couldn't agree with you more. I think the Doing Business report and the index that we produce is just an indicator. It's not basically an indication that the dollars are going to flow, because you need to do much more than what DBI or Doing Business Index show where you are on the on that index, and that's basically what we tell all our members at the World Bank. Let me go a little bit to your direct question. And I mentioned earlier, basically, that when you're looking at the FDI and we're looking at investment in general, you're looking basically at how to improve the standard of living of the people of the country, okay? And every country is different than the others, and I totally agree with you. Now, what can we do? I mean, we can basically look at the future and see, can we stay where we are today in a low-skill economy, or what do we need to do? And remember what I said earlier, the human capital. What do we need to do with our human capital, basically, to get it where we can really help improve the standard of living of our citizens? And that's a basic question that needs to be asked for in all countries. Because, look, we can sit back and say, look, I mean, I have population that is not highly skilled, and with that, I can only do this. And then I can stay where I am. Or I can say, look, I have a 20-year vision. Today's people who are going into school, or those who haven't yet finished elementary, I'm going to start basically changing the way to the future. So yes, it will take time. It will take a lot of investment and so on. However, we also agree on what you have alluded to, that the social safety net should be there. You cannot basically forget, some people are going to be left behind. And every change, you're going to have some people that are going to be left behind. The social safety net shouldn't be, in my opinion, about only giving cash to those left behind, but how basically to get them from where they are to really participate into that. And in the meantime, helping them in getting the retraining probably, and helping them probably financially to have a minimum decent standard of living. So it is not a one size fits all. It is not about the doing business report or the index of the World Bank, and I totally agree with that, and that's basically what we tell people in our, even though there is a lot of hype around that index, it's only an indication and not sufficient basically for what you need to get to. Sorry, it's a little bit long, but I just wanted to make sure that it is basically important to plan the future, because a lot of these things that we are talking about take time to materialize, especially when you're looking at the human capital. And I'm going to add one more thing.
Yeah, very quickly, I think we're out of time.
I would like basically people to look at one of the reports that the World Bank has put 2 years ago, which is called The Wealth of Nations. It shows one simple fact, that in advanced economy, 2/3 of their wealth come from their human capital. I'm going to stop here.
We're out of time, yeah. That was a fascinating discussion. Thank you all for being with us on Counting the Cost. Thank you. And thank you.